Existing home sales come out, Zillow downgrades their forecast, and the big Fed meeting that everybody was expecting, everybody was excited about, no, not really, came out. And what happened?
Nothing.
That's right. Actually, literally nothing. Nothing changed. Fed funds rate didn't change. The amount of cuts they're pricing in didn't change. Jerome Powell said some interesting things about inflation being transitory again, which I was shocked that he would use that word because he really got hammered on that last time. Worries about stagflation, but so much unknown with tariffs and a lot of things like that. Really, at this point, market and rates staying really unchanged. So this is the Fed watch tool that I use, and you can see in May, which is the next meeting, 85% that nothing's going to happen. But when we get into June, we are pricing in the rate cut probably this summer, June, but it's already kind of baked into the market at this point. And then looking at rates, this is mortgage-backed securities, and you can see the consolidation here really since about February 25th. Really nothing changing. And we've just kind of been on a holding pattern. And when we look at rates at 6.72%, remember everyone's rate's going to be different. People are getting lower rates or higher rates depending on credit and points and all that kind of stuff. But we want to use the same scale every year or every week to look at what rates are doing. And again, really consolidating this 6.75 and have not been able to get below that in a while. And the one time we did, immediately came back up. So we are kind of stuck at this 6.75% rate here for a while, and I think that's not going to change, at least based on the data now. Now, Trump has said, regardless of what you think of the administration, he's really pushing to drop the 10-year Treasury. He's really pushing the Fed to lower rates. But Jerome Powell is independent of all that, regardless of what we believe. The Fed is not attached to what the administration can make them do. So we will see if they lower rates right now, market pricing in 2 rate cuts in 2025. So this was an interesting article that where I want to look at Zillow downgrading their forecast, but this is housing sentiment. Now, I was pretty shocked by this, where they said Zillow has the biggest or the highest net favorability rating and Blackstone has the lowest net favorability rating, meaning that people, when they think about Zillow as a real estate leader, as economic data, they look at them quite favorably. And Zillow does come out with a lot of current data. So here's a chart showing the net favorability rating of Zillow at 39.9%, Realtor.com at 23.9%, Redfin at 22.9%. But look here at Blackstone, 55.5%, and NAR at 42.6%. And Rocket, look at all these negative kind of sentiments on the home builders, and even the Mortgage Bankers Association, which has pretty good information in my opinion, has fairly low sentiment when people look at the favorability, especially compared to Zillow. Now this is all perception, and one of the things when you look at Fannie Mae's home purchase sentiment index, 22% of people thought it was a good time to buy a home, meaning 78% did not think, but that is just people's feelings. And as those feelings change, that will change the market. And what will need to change? Probably lower rates. Now, when we looked at total existing home sales, a lot of the market predicting to be under 4 million in February came in at 4.26. So existing home sales are up. And when let's look at this housing market map from Zillow, where it's downgrading its 2025 home price forecast. And so Zillow says, on Tuesday, Zillow economists published their updated forecast model projecting that U.S. home prices, as measured by the Zillow Home Value Index, will rise 0.8% between February 2025 and February 2026. And that's another downward revision. Last month, their 12-month forecast had projected a 1.1% increase, and a month before, they expected a 2.9% increase. And then they have this interactive map where they show the Zillow forecast for metro level home prices changed between February 2025 and 2026. And you can see red is kind of a negative home price sentiment on where they're predicting the market to go. And there's really not that much red. When we kind of zoom in here, let's look at Florida. You could see, they've got the major markets. Orlando, 1% forecasted growth. Deltona, 0.6. Miami, 2.3. And even over here in like Cape Coral, still 0.9% growth. But look at Louisiana. I don't know what's going on in Louisiana over here, but a lot of negative growth throughout like New Orleans is saying negative 5.5%. And they have the rankings here. And we've been in some of these negative rankings, but not so much lately. These are all the top 10 metros. You can see here Atlantic City, Knoxville, all the way down the list. But more importantly, these are the ones they are predicting with the weakest home price appreciation. And finally, Florida, not on one of these lists, but look, Louisiana, 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 Texas, Texas, Louisiana, California, Texas. So I don't know what's going on in Louisiana, but remember, every market is local. And when you look at really everyone's prediction, it's going to be most likely a pretty flat market. Inventory continuing to trickle up. Now, what could put a monkey wrench in all that is if rates were to really, really drop, I'm going to say below 6.5% or lower. We've already seen mortgage applications are up. They're up 10% over the last couple weeks. Our pre-approvals are up at least 100%. Of course, we're getting into the spring season, so we shall see. But I think the market's going to feel very, very similar to last year. So if what you did last year was working, do that. If what you're doing wasn't working, then look at a different plan. I talk a lot about a daily success plan. Right now I'm doing, I'm going to put a link in the description. We're doing quick Zoom meetings, 30 minutes, going over every first-time home buyer program, the bonds, the grants, all the things, because right now buyers need a competitive advantage, and if they fit in one of these programs, and a lot of them do, it's a great way to use that to motivate a buyer, especially right now, because the best first-time home buyer program is a motivated seller. And even though every market's different, there's a lot more than what used to be. So we're going to keep paying attention. Are we going to get stagflation? Are we going to get the 2 rate cuts that the Fed's promising? And more importantly, tariffs and one of these things. What is the current administration going to do, and how is that going to impact the market going forward? So we're going to keep watching all the data. As more information becomes available that moves the market, as always, I'm going to cover right here. Have a great day, great week. This is Rayce Robinson, your favorite Florida mortgage broker. I'll talk to you soon.